CTM. What's going on, everyone, on this Taco Tuesday? An old school style stream from CTM. Glad to be here with you all. It's actually going to be a fantastic session. We got a lot to get into today, a lot to dive into. We're going to start over here with Bitcoin, just give a brief overview. We're going to get into the macro, build that into both taking a look at Bitcoin and crypto, and then into stocks, and then tie them all together. Dun, 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 dun. Jared, thanks for that. On the new bull runs, the CTM bull runs, right? You have to turn off some of the indicators to set up. As we get to those, as we look at Ethereum and Bitcoin, we'll take a look at that together. Right now, though, we are watching, what are we watching on this chart? A couple of different things. You could see the 0.786 retracement fib. Every time from taking the high to the low, prices retrace back to the 0.786 retracement fib. We have entered what would be the blast off zone. The blast off zone. Some people are now calling it the banana zone. Then you can see over here the trend lines, the outermost trend line resistance. Every time that has broken, that has also led to what was first launchpad and then into liftoff. But something is developing over here, and we're always watching where we could potentially be wrong or where something's not right or where something's a miss, regardless of what our expectations are. And we've had a pretty important breakdown that we did not want to see. It doesn't mean that it's over. It means that we have to here pivot to a place of caution as we've had what is a sell impulse, a trend line break out of what should have been a lofty ascent. That area, that break is exactly over here, $66,000. Before the break, we were obviously watching it, and then you could see the breakdown over here, this trend line over here, the lower red trend line, the structural resistance, the break of 66,000, that set us off into what set up first, a test all the way down, of this important support. That support, you can see it's bolded over here. This has come from the high of the spot ETF launch. After price, remember over here, in January, as people are calling, oh, this was a sell the news event. So I don't know, February tends to be a very, very bullish month. Why we were trading under, what was it, $58,000? Why we were trading, 58. Why we were trading under $38,000 in January, we said by next month that we take out this high. Sure enough, we did, right on time. And you could see at first that was resistance. And then you had, boom, a break above, and then it was flipped back. That's a very important support level. You can see it was tested on that breakdown from 66K. It's also horizontal previous cycle ceiling. Not the highest price point of the cycle, but it's where we saw the cycle establish that resistance. Price traded above, resistance. Price tested above his support, broke it, resistance. That's the previous cycle ceiling, and you can see that played a role. That keeps popping up. Aldo, what do I do? That keeps popping up. Could you imagine we keep ascending? Today, we take another step towards the summit. There's no question about it. You're going to absolutely love it. Bum, 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 bum. Oh, the bears. The bear markets is where it's all to be had. All right. So you can see this level over here is very, very important. We had the opportunity yesterday to potentially be putting in a first sign of repair. You see that we broke down this level over here and then traded above this area of support. Now we have marked up here the highlighted red structural resistance. We have that as the area that we need to reclaim for this breakdown to be nullified. And yesterday there were some positive signs that potentially that could be in play. We talked about, though, why we were giving it room and felt that it was the appropriate thing to do. So far, we're just rejected. We're back into the zone over here. So we're kind of in no man's land, waiting to see what happens. If we test back down into this area and that breaks, that sets up further downside. By the way, thus far, this has been nothing more than a very, very stable bull market breakout with drawdowns only to the degree of 20%. If we were to see something like a 30% drawdown, which you can see in this cycle happen multiple times, we had not only it occur multiple times in the previous cycle, but much more significant drawdowns. A 30% drawdown during this cycle, that only takes us down to, and mark it well, 30%. No, that's 40%. 30% takes us just below 52,000 Bitcoin, and that's an upward sloping trend line. So that would change. But that's the big trend line. That trend line over here, just like the bolded one above, is a major, major level. A major level. So that would be normal. There would nothing be wrong with that. And we're going to go ahead and continue to navigate this as best we can. A lot of people are talking about July is a very bullish and notoriously up month. Especially when, by the way, it's a red month prior, which it just was a red month prior in June. And every other time we've had a red month before in the history of Bitcoin, we've seen a green month. Now we have seen back-to-back greens before. Again, my speculation is watch out. We could easily have 2 red months. Don't get comfortable. Stay on the right side. Let's go ahead and continue to put this together. We'll come back to this in a second over here. First, let me start off what's going on over here in the macro. NASDAQ here, holding on to some gains, consolidating very well ahead of a big week. We have a lot of data. We have what is today or this week, the jobs data dump. Today, we saw the JOLTS job openings. We'll get to that in 1 second. First, let me start off and just say the dollar, as NASDAQ is consolidating, is doing the same thing. It's just consolidating in this range. We see over here, after that black diamond buy impulse, or I should say sell impulse since it's bonds, and you can see that yields have been selling off. This is the area of interest that we're going to watch. A breakout above, can't deny that. That would be a big deal, but this should be resistance unless it's broken. Today, we had the ADP non-farm, the JOLTS job openings, and you could see that there were much more jobs openings unless we dig into it further. Took one off, by the way. Well, the net was, first of all, they revised once again last month, the prior month, down significantly. Again, we keep getting these fake numbers. And all the job openings that were created, by the way, were job openings, government jobs openings. All right. So we have also today, Powell speaking this morning on the US Open, 9:30 a.m. Eastern time. He was over in Europe on a panel, and he said a few important things. He said that the last inflation reading suggests that the disinflation path is being established. He said that we've made a bit of progress of inflation. Remember, he wants to see clear progress before he gets ready to cut. That's what he's signaling to us. But he also says if the labor market unexpectedly weakens, that could also cause us to act. Watch what happens on Friday, non-farm payroll. If they want to, if they have the data is manipulated, if they want to cut, for what reason that might be, who knows? Whether you think that, well, there's an election, whether you think that, doesn't matter. If they want to cut, expect this Friday to see a very, very bad print. If that doesn't happen, then likely they're going to receive some repricing. Right now, we're seeing the markets pricing in by December 2 cuts. They're pricing in an 80% chance that we have 2 cuts into the end of the year, and those cuts could very well be priced out if we were to see a strong number. At the same time, if we see, this is like speak. This is like coded speak, in my opinion. And when he's saying if we see that unexpected weakens, by the way, the first time he said that was in the FOMC press conference, right? And then we saw a big miss one time. And then in June, let me go to June over here. Oh, that was a beat. All right, so I'm on my toes. And then speaking of on my toes, jump over at Powell. We have the ability to take our time and get it right, keeping everyone on their toes. We're well aware of the risks of going too soon and too late. Powell walking that fine line and keeping everyone just simply on their toes about what they're going to do. And meanwhile, they just keep holding and holding and holding after coming up that quickest tightening cycle in history. They now continue just to hold as long as possible. We have the ability to take our time and get this right, but we understand the risk of going too soon and also too late. He's a master at it. Now, this is funny over here. We have ECB President Lagarde saying it's very unlikely that we'll go back to ultra low rates. And then on the same panel, Powell says, well, most people think we're not going back to ultra low rates of the recent past, but nobody really knows. And that you could see that teamwork. You could see the messaging. They're just keeping everyone on their toes, not giving their hand away. And you could see when Christine says something, it's contradicted by Powell. By the way, Ben Bernanke said, I think it was 2012, former Fed Chairman Ben Bernanke said that in order for QE to be effective, rates need to be at the lower bound, at or near zero. If at any point in time there's a situation where they need to flood the system again and return to outright QE, the rates will be at or close to zero. You could bank on that. All right, let's take a look at what's going on here, starting off with stocks, and then we'll move into crypto. He's good. He's good. All right, so we got NVIDIA today with a close long pending, getting set to lock in some nice sizable profit over here. And I think everyone's attention here is on Tesla. So we'll take a look at Tesla 1 second. FNGU continues to be an absolute beast. As we get over to the new CTMX templates on the daily, I want to talk about that. First, I want to start off with Tesla. Tesla finally able to have this breakout of structural resistance and is shooting up like a rocket. 22% open position. People wondering what is going on. They beat delivery expectations by a few thousand cars, right? Tesla's shares soar after better than expected QT deliveries. I want to jump down to two things over here. The first is this. Tesla short interest is out almost. It's a huge number. Everyone remembers and familiar with GameStop and what happens to shorts. If we see a catalyst, we could see actually Tesla break out. This has been consolidating here ever since its 2021 November high. And you could see this trend line over here. If this breaks out, that could set up a monster move. Or if the move fails, at least you know, and it doesn't even matter, we're in way ahead of it. We have plenty of room. But here's the thing. On August 8th is when Musk gave the deadline for him unveiling the fully autonomous robotaxi. Many people say it can't be done. I can't imagine that it could be done. I can't imagine Tesla is ready to go ahead and unveil the robotaxi. August 8th is very soon. Is that what we're seeing the lead up to? Is this a buy the rumor, sell the news type of event? I don't know. You don't know. We don't need to know. All we need to do is follow the momentum, knowing when to be in the market, when out, and on what side. But I'll tell you what, check this out. Once you use Tesla Autopilot, full self-drive for commuting, you won't use any other car. Look at this over here. He's saying that you could drive 1 hour from Palo Alto to San Francisco completely hands-free. It's like having your own personal Caltrain. You could park in your garage. A Tesla is an essential tool for serious people. So get ready. August 8th, the countdown continues and begins. This is our current CTM2 daily template for FNGU. And you can see holding an open position here, 51%. That has been almost the norm ever since the bottoming in 2023. Ridiculous. You can see that we are coming close to touching and tagging the 2021 high. Very, very interesting. That's an important level to watch and watch price reaction off of it. We'll still be holding this trade for a while before we let go of this one. NVIDIA is different though. Now, FNGU, people are looking at these gains. Remember this as we start getting into Bitcoin and crypto. People are looking at these games and they're like, if I had just been trading this from January 2024, I would be up 135% this year. Forget if you were to do this from January 2023, right? 2000 bear market, out of the market the whole way. One trade, out of the market. Now, here's the thing, and this is going to set up the next level piece. This is going to set it up. So just pay attention to this piece of information and hold on to it, and then we're going to come back to it and tie it all together at the end. Not at the end, in a little bit. You do not know what is going to happen next. Usually, remember Ethereum in 2022 during the bear market? 390%. It was the leader in 2021. It was the leader in 2022. This is CTM trading. So the natural inclination is to go ahead and put more of your capital, your purchasing power into that asset. It's recency bias. You want to put whatever's best performing, you expect that it's going to continue to perform the best going forward. You want to have more exposure to it. 2023, Bitcoin outperformed Ethereum. Bitcoin, the old consistent, right? We've done, if you go into the Nuggets channel on Discord, one of the pinned messages or the pinned messages is portfolio diversification. It's a 15 to 20 minute video. If you want to see the hive mind and how well they work together, watch this video and it will help clarify for you what the perfect allocation is. However, that has changed, right? That has changed a lot. David introducing buy side boost, and that has something that after him sticking with it for a long time, introducing it, spending all the time, manually back testing it, sitting with it, working through it, presentation 1, months past, presentation 2, finally the hive mind says, okay, this has staying power. Let's take a deeper look at it. You don't know just because FNGU has been crushing it that it's going to continue. Same thing with NVIDIA. Momentum begets momentum. Here we're getting ready to exit this trade over here on NVIDIA, which has been, obviously, everyone knows, an absolute beast. Nice to lock in some profit, but momentum begets momentum. If this thing were to come down, by the way, we have earnings coming up for earnings across the board. If this were to gain momentum coming down, you all have seen and are familiar with, after things go up, how they come down. Knowing when to be in the market, what side is everything. All right, I'm going to come back to this in 1 second. Let me first get into and take a look at what's going on here with our positioning across the board. I'm going to start over with our current positioning. And just a reminder, the current and newly released templates here, the Bitcoin and Ethereum bull runs. There is questions out there whether or not the Cardano and Solana could be released core to take a look at. That's probably a good idea. There's just not enough data on there for me to feel super confident about it, right? Again, this is a lot different. You have at least, I'm on the wrong template. I can't go back into it. Sorry. I could do it. Let's do it. Dun, 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 dun. There you go. So look, this coming back from 2012 to present, it's only 48 trades. Now, 48 trades is not the ideal sample size, right? 100 trades in a mechanical system, that's usually the minimum. The thing is that we use our strategy across time frames, across assets, across asset classes, all different instruments, and we have that faith in it. The idea of the Bitcoin bull runs is to be able to outperform trading when you enter into that buy impulse. The average trade is 79%, 48 trades, 20% drawdown, a mere 5 point, almost 3 million percent return, and we're out of the market. And remember, discretionary 66,000 is where we got out of the market. This getting out a little bit lower. This doesn't get back into the market now until we're approaching 65, right? So we are positioned very, very well right now. We could see that we belong out of the market. Momentum has waned, and you can see momentum is going sideways. We are in the market when the markets are moving, not when they're sideways. CTM 2.0 positioning, CTM 2.0 on the left, CTMX on the right. We're short here, continuing to hold this short position. And that's it. We trade momentum regardless of any expectations. Ethereum is still holding its bull run. Ethereum is still about $181 still into having to exit over here. And Ethereum, we talked about again. Remember, we talked about Ethereum over here in this particular juncture. Let me just jump back. Ethereum right here. It had gone to a new all-time high in November 2023. As far as the green line is the PNL. The blue line is the highest intra-trade price ever, PNL ever. And then it went into the largest drawdown since 2020, since the last halving of Bitcoin. People are like, we say, we're always one trade away. Boom, next trade, new all-time highs. Since then, Ethereum has been maintaining that level very well. Out of everything that we're tracking right now, Ethereum is looking the best. It's still in its uptrend. We're still closer to looking for buy-side trades, about $78 away from taking a buy entry. Bitcoin is short, right? Remember, Cardano has been short now for a while, attacking the short side. We saw the first sign of momentum rolling over when Cardano started attacking on the short side. I wish I had that further back. And now also Solana is attacking on the short side. Solana, though, is actually closer now to go ahead and take it along. So we got a mixed market. We like when we see, right, when we see that confirmation. Bitcoin attacking on the long side, Ethereum attacking on the long side, Cardano, Solana, all of them attacking on the long side. We're not seeing that all net right now. We're seeing a mixed market, and we're seeing that mixed market since March. Jump down over here and just one more time. Since those March profits were taken, we've been going sideways now. Going sideways means no new all-time highs, with the exception of Ethereum, who on the announcement of SEC reaching out to the exchanges to get ready for the spot ETFs, we were able to take a nice trade over here. We've just been running sideways. All right, remember this. This sets up what we're about to take a look at right now as well. Remember we talked about NVIDIA? We talked about FNGU. It's been obviously a massive monster beast, but you don't know what happens next. You have to be comfortable with understanding and knowing that you do not know what happens next. And the only way that you could be comfortable with that is if you don't need to know. If you don't need to know, if you could trade what is happening, it doesn't matter what happens next. I have no problem, even though expectations were on the break of the yellow trend line, then the break of the 0.786 retracement fib, that we could be getting ready for much higher prices. But when there's a technical breakdown, okay, you got to get cautious. That's what we've done. We just got cautious. We easily revert back if we regain momentum, if we regain levels. That looks like on CTM bull runs, right? Having to go ahead. And that happens many times. You could see exit, enter, exit, enter. Exit, enter. There's nothing wrong with being out safe and protected and waiting for that momentum to kick in, because you never know when it's going to be like exit, boom, price drop. Exit, boom, price drop. Momentum is waning. Momentum suggests that there could be further downside pressure. It's better to be safe and sorry. I mean, we're attacking the short side. The first time since we had the GBTC favorable court ruling. By the way, if we did not get that court ruling, I believe we would have seen further downside pressure on Bitcoin. That led up to the front running of the spot ETFs, the launch of the spot ETFs, and the inflows into the ETFs. We since have seen a bit of stagnant. Look at Bitcoin going sideways. Look at the flows going sideways. We've been seeing net outflows recently, starting to change a little bit. Yesterday was the first 100 day over $100 million of inflows into the Bitcoin ETFs in a while. So that's a positive sign. It's not enough for us to change. I'm interested to see if Bitcoin has a down day today, what it looks like today with the flows. And I imagine that we'll see outflows today. So we're waiting here for the bull run to click back, momentum kicking back to the upside. And if that happens, we turn bullish. We go from cautious to bullish, right? Same thing here, right? We're not too far away. We're about $2,000 away here, just under 64,000 now before we'd be attacking to the upside. So, right now we're just cautious and we're getting ready. Let's take a look at what's going on over here. This is a massive effort by CTM, Collective Collaboration, Hivemind, introducing. It's been 1 year in June of 2023 since the CTM solutions were introduced on stocks. It was over here in 2023. And this is the first upgrade that we have seen coming from some extreme talent here in CTM. And now we're looking at TQQQ, NVIDIA, FNG, Tesla. You all know that right now NVIDIA is getting ready for a pending close. Doesn't mean it's going to close. It depends what happens by the close of today. You see just the pending alert just ticked off. So by the end of today's session, we'll know the exit coming tomorrow morning on the open if we're exiting indeed. Or we hold. It won't be the first time that we've come down to the wire many times. But once we close out all of these open positions, when we close out the current Tesla trade, the current FNGU trade, the current NVIDIA trade, at that point, I'm going to make the transition here just into the CTM daily on the X templates. They're vastly superior. You could see the degree over there. Look over here, let me point out to you the drawdown on Tesla. Tesla has been doing what? It's been consolidating in a very tight range for a long time. This is not the ideal circumstances for a momentum-based system, and we trade momentum. Price goes up, awesome. Price goes down, awesome. Price goes sideways, consolidating in tight range. That's not the assets that we have chosen. We have chosen select tech, and we have chosen select crypto to go ahead and trade. And they have momentum. We saw, and it was a bad year, 2023. I forget the return on Bitcoin 8 hour, somewhere around 85%. That was a difficult year. Historic volatility was very low. Without the favorable court ruling, I think it would have been a lot more grinding. That was a beautiful, beautiful gift. Tesla, look at the difference here. You could see since July 2023 in drawdown, running sideways. Here it is on the chart. July 2023 in this tight range over here, in drawdown, going sideways. So finally catching a bid. We're there to capture it. But look at the difference here on this template over here. July 2023. Look how well it's been able to kiss the sky, keeping that drawdown, even that during that extremely adverse situation, PA, even kicking to new all-time highs, staying out of the market, kicking to new all-time highs, and again kicking is absolutely beautiful. If you just look back, you can see over here, you can see that it says closed pending long. And that's signaling to you as the buy side deviation is getting below the zero line, that you can see the reading over here is 0.03. that if it closes with criteria to exit, then the exit is going to be on the opening tomorrow. Beautiful work over here. Let's take it further. So you can see the entry. This is TQQQ. I like the TQQQ here because the way that the QQQ is balanced, it's taking a diversified tech and it's constantly changing what that allocation is depending on which companies are making money and whatnot. So I like TQQQ a lot. Look at the performance here; it's beautiful. Let me show you some of the performances, right? And this is going to be 1 second as we get into the next level piece. Important. So just do a rundown over here. This is Tesla's the only one different. So we'll start with TQQQ. This is from 2016. I got to change that template as well. My bad. So let's do this. Stick with me. We'll get back to that in a second. We will. TQQQ. NVIDIA has been an absolute beast, but I wonder, and by the way, you could look at the superior entry, the way superior entry to our current entry on CTM 2.0, entering at 106. Look at this over here, entering at 57. Sorry, it's like 57. I know this is at 89. Superior all around. And then over here, FNGU, beautiful beast. And then Tesla, right? So let me come over here and take a look, and I'll do it off of this. This is what I wanted to go at. Well, you see something different here, right? All right. Let me just sit back over here and get ready. This is what I want to and where I want to take us. So let me tie some thoughts together. I wanted you throughout this session to hold on to a few different things. The first thing that we were looking at was FNGU, and it's an absolute gunner. It's an absolute beast. I want to be able to talk about the returns to lead this in. So let me do this. Let me pull up this so that we can go ahead and look at it together. All right. So TQQQ, you're tracking since 2016. 2,400% return. What's getting it done for CTM on a yearly basis? Right? 70%. More than getting it done. Look at that drawdown. 15%. NVIDIA here, this is also since 2016. Just want to make sure. Since 2016, obviously here, an absolute gunner, an absolute beast. Drawdown, return is fantastic. And I love the stop loss. My one concern, and this is personal bias, what happens with NVIDIA in the future? I like the TQQQ in the sense that the allocation is adjustable. I like FNGU in that the allocation is adjustable. What happens if NVIDIA does what Tesla just did since 2021 or 2022? FNGU, this is from 2016, right? So again, monster performance. Drawdown is very, very, very acceptable. And Tesla, the start date here is different. The start date is going to be at 2020, right? And the reason for that is because there's no way that I personally would have been trading Tesla as far as any of our allocation prior to that point. Prior to this point over here, Tesla was just range bound under $20. It's not something that would have been on our radar as far as having an allocation to it. So we track this starting in 2020. Let me just jump back over here and find out where we were. All amazingly fantastic. Now, Tesla too. I don't know what, I mean, if Elon delivers the robotaxi, if Elon delivers the Prime bots, everyone's going to want a robot. If Elon has got solar panels across everyone's roof, I mean, the potential for Tesla is enormous. And wait until Tesla starts going ahead and eating at NVIDIA's market share with some high performance chips. And it's not going to be just Tesla. You're going to have other people who are right now working and are going to eventually have the technology that's going to be able to compete with NVIDIA. Right now, no one else can. So my concerns and worries are, which are the best? Now, this allocation is amazing and fantastic, right? By the way, I'm not going to get into the particulars of buy side boost. If you're not familiar with what buy side boost is and how it works, on the Discord, there's the buy side boost discussing channel. There's pinned video presentation, and then you have to go ahead and read through that chat to follow and understand of how it's deployed. I'm going to go ahead and continue presenting, assuming that you have a familiar. It's a public session. It's a public session. I love the vibe. I love being around all the people. It's beautiful. Yes, we're not gonna blah 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 blah. I think I just needed a second to breathe over here. That's all. So oil is, that's not our chart, Jordan. We've been tracking oil since this breakout over here. We have this lower structural line as where this breakout is nullified. We got ahead and took out this structural resistance, confirmed it into support, and are now breaking up another level. So a break below this red line, that would be an underbelly breakdown and the first sign that this trend is waning. I'm not going to go ahead and draw anything like this. We said from the beginning we're going to give it room. This one probably is appropriate, but this one would coincide with the red line underbelly breakdown. That's what's to watch right now. And that's it. So since the breakout over here, just below $80, we've had the buy impulse in effect. This continues to be our invalidation, right, of the trend rolling over. We've taken out one structural resistance, confirmed it into support. We've now taken out another structural resistance. A break below that will be the first sign of this trend rolling over. But long-term here, buy impulse in effect. This is the invalidation. I'm not looking to stand in the way of that right now in any way, shape, or form. All right, we got the breath we needed. Let's get back to it. Now, the differences here, though, as you look at the stop losses. NVIDIA has a very attractive stop loss for a buy-side boost, 1.5%. Tesla, very attractive stop loss for buy-side boost, 1.8%. And the stop losses on FNGU and TQQQ, they're wider, almost 7%. Now, their drawdowns are quite manageable, less than 15%, less than 15%. All right. Now, let's go ahead and take a look at where we need to go. We talked about, yes, FNGU has been a monster. Not that NVIDIA hasn't. Not that TQQQ hasn't been performing very well. Tesla has been consolidating like crazy. When it gets going, it's going to get going. But you've looked at, and we mentioned, look, we've been running sideways here since March. Now, from October to March, we saw massive run-ups across the board in all of, but since then, and you remember that day, I remember it as clear as day. I said to you the day Bitcoin exited here, the first week of March, prepare yourself mentally. We may be going sideways for a while. Now, I had no idea. Awareness, yes, but I don't know and I don't need to know, right? Why don't I need to know? Because our plan, our meticulously developed, worked out plan by the hive mind has us know when to be in the market, when out, and on what side. Even still, to have the awareness to prepare yourself mentally, it's important. Now, during this period while we've been running sideways, what has happened? Well, I'm going to track that over there from March. So from March, you're seeing TQQQ screaming into roaring in the bliss. You're seeing NVIDIA screaming, roaring in the bliss. up roughly 30%, up roughly 40%. You're seeing FNGU up roughly 50%, roaring in the bliss. And you're seeing Tesla up 24%. How do you know? You don't know what's going to happen next. What can we do about that? There's got to be a better way. Let's take a look at it. Sounds like a Shark Tank thing. Couple of ideas. The first one I'm presenting, and we have 4 ideas to go over. First one I'm presenting is looking at Bitcoin and Ethereum, both on the 8-hour, using our CTM X solutions, NVIDIA and Tesla. And because NVIDIA and Tesla have that 1.8 and 1.5% stop loss, right? Bitcoin stop loss, small and tight. Bitcoin is so quick to get in and out. And then Ethereum with a 3% stop loss. All of this is very conducive to buy side boost, because if you were to enter, for example, Ethereum has the largest stop loss at 3%. If Ethereum entered the market and everything else was out of the market, it would be a 100% account allocation into Ethereum. Until it exited the trade with a full stop loss, that would be 3% of the total account. Or another instrument entered the market. If, for example, you can see over here, Ethereum rises significantly. That must be like a 15% move up over here. And then NVIDIA enters the market. You enter NVIDIA's trade with a 25% allocation. You're selling 25% of your Ethereum allocation, which is now at 75%, to enter that NVIDIA trade. You're essentially taking profit. And then if the next Bitcoin were to enter the market, you again exit another 25%. You're now holding 50% of that, 25% in Bitcoin, 25% in NVIDIA, 50% in Ethereum. And if Tesla then enters, you take profit and then enter that 25% into Tesla. This, and this needs to be looked at, but before I go into that, let me go ahead and move into the next thing. This is where I'm leaning towards, and then I'll tell you my potential concern. I think that Bitcoin on the daily, stop loss 1.5%. NVIDIA on the daily, again, attractive stop loss. Ethereum on the daily, stop loss 3.3, perfect. And then Tesla on the daily. And just to give you like a little vibe of how that worked, remember when we talked about October, grayscale ruling, look down over here. You see that Bitcoin enters the market and NVIDIA is out of the market, okay? Ethereum was out of the market at that particular moment, and Tesla's out of that market. So you get 100% allocation into the Bitcoin shortly thereafter, but that's a nice little bump. I don't know what that is. I imagine that is like a 15% bump, but it doesn't matter. Then you enter Ethereum. So you take profit on that 25% of the full allocation on Bitcoin, and you enter Ethereum. Then the next thing that happens is you continue going sideways until here. NVIDIA enters the market. What does that mean? You're exiting another 25% allocation of Bitcoin. You're entering into the NVIDIA trade. So what about when in March, when they all start going sideways, or Bitcoin and everything else? Look at Bitcoin has been on the sidelines mostly, except for this one trade over here. But look what happens over here, right? So you're out of Ethereum, you're out of Bitcoin during this stage. Tesla, you're out of NVIDIA here as well. Just follow the cursor up. Tesla enters this trade. I don't know what type of gain that is, but it looks significant, right? So by the way, part of that gain is locked in as NVIDIA enters the market over here. Full allocation. Then what happens over here? NVIDIA enters the market. NVIDIA enters the market. It's taking a position from Bitcoin and Ethereum. It's a massive trade. All of that capital that's on the sidelines over here and more, you don't know what's going to happen next, whose turn it is to take the rotation. You could see the massive advantage over here. So the TradeStation would offer you the ability to the fees are high on TradeStation, right? For crypto, 1%, I believe. But that is definitely a thought as far as one exchange that could do it. Um, on the daily time frame, even using a 1% fee. Let's take a look at Bitcoin. You ready? So this is Bitcoin on the daily time frame. I have no idea when this is started from. 2016. Let's look at numbers that we could remember. From 2020 till today, the return is 3,200%. What happened? But we're only using a 0.1% commission. What happens if it was 1%? 26% drawdown is pretty high. It's very high. The return is there. FNGU tagging the all time. I have almost. David, this is probably the most important question thus far of the session. I'm highlighting it, saving his bookmark, and and that's a discussion that we should all just take up right away together collectively in the Discord. And or does it need to be? David? You know more than anyone. Does it need to be on the same exchange? Why could you not use a stockbroker for the stocks and then another exchange? And we've talked about no one knows the best time to do the rebalancing, but if that were once a year or whatnot, anyway, very important. Oh, TradeStation is no longer an option. We need to take up on that. I want to know the pushback thoughts about using different exchanges, what the hurdles are, the benefits. This is using now. I spoke about the stop losses on FNGU and TQQQ being wider and therefore not attractive. However, when we look at the drawdowns of NVIDIA, 12.5%, Tesla, 10%. So they're a little less by 5-6% than both TQQQ and FNGU. But those, even though they have the wider stop losses, are highly attractive. NVIDIA's overall performance and drawdown is the most attractive. The concern is, or not the concern, the idea of why it might be preferable to use TQQQ and FNGU is because of the rotating allocation, where NVIDIA and Tesla is just NVIDIA and Tesla. So the next thing that needs to be looked at is what that looks like as well from the perspective of Bitcoin on the daily, Ethereum on the daily, and then FNGU and TQQQ. And I don't know if that's the easy decision. CTM problems, but something that needs to really be looked at. And then the last one that needs to be looked at, and I'm not leaning towards this way, would be looking at the CTM bull runs with Ethereum and Bitcoin's bull runs, and then using, here I have NVIDIA and Tesla, that's interchangeable between TQQQ and as well as FNGU as well. I lean the other way because the Bitcoin bull runs hold on to the capital for so long once they enter the market. They enter the market and they're in the market for such a long period of time, unless they're out, like 2000 and during the bear market, you could see that they're just out. And during the bear market, you could see that here NVIDIA putting in the work, carrying full allocation until Tesla joins in as well. So I'm not sold. Those three, I don't think it's this one. This was on the 8 hour. I lean towards the best proposals here being Bitcoin buy side only, Ethereum buy side only, both on the daily with either NVIDIA and Tesla or TQQQ and FNGU, or potentially using the Bitcoin bull runs. But it sounds like that even though this seems like a beautiful way to go. We got to figure out now the practical standpoint and how this could be executed. And even if it can't be achieved and you're using two separate brokers, a crypto broker and a traditional securities broker, I think it illustrates very well the importance of the diversification, not only within assets, right? So in this assets being crypto or stocks. These are, but showing or just being able to visualize the direct benefit of having a weighting between stocks and crypto. And you could see it through the last 3 months since March, as crypto has gone sideways and these mega gains have been made off of stocks. Or you could go back into last October when equities were in a correction and crypto was roaring. And then you could see it over so many different ways. So I think that at least it illustrates the importance of, trying to think of the word, the tango, right? The tango is a dance between two people. This is two asset classes that we've dialed into what we believe are the best within it for achieving, not achieving 70%, getting it done, for overachieving what our goals are. All right, we're going to leave it here today. Chew on this. Get into the discussion on the Discord to see what merit there is, to see how it could be unraveled before we get into what's the best as far as these different options. Let's get into and work on feasibility of execution and see what that could look like and how that could work. So let's put our minds together on that, work that out, and continue. Everyone, God bless you. Thanks for being here today. Have a beautiful day, everyone. I'll see you all on the inside.